So, he talked about the golden age of fraud, which is interesting. And that was a backdrop to the MicroStrategy trade, which we just talked about. What we thought was be instructive is to show how Jim thinks about the world, what he thinks about the current condition. Every Fortune 500 company, I won't put words in his mouth, but has massive adjustments to earnings and profits. And that's the norm. And he said, we've gone so far from the norm.
That used to be a big story when I was a kid at the Wall Street Journal. When someone adjusted earnings, what's going on here? It's like it could be fraud.
Right.
It's not fraud, but it's that type of a screw up is not good. It's not good management, balance sheet management.
No, that's right. And so we thought we'd give you a little highlight into Jim's thinking. But then further in that interview, he talked about MSTR and MicroStrategy and the trade he was doing. Let's go to that. Let's move on to MicroStrategies. I have a lot of questions there. One, it would be great if you just explain to the folks on X, which is where we're going to drop this show and our podcast. You're trading for a spread. You've put a trade on to capture a spread. The company is leveraging everything in its capital structure to go buy Bitcoin. And I'm not sure, when I read stuff about what you're doing versus what the company in Saylor, everybody says, well, they're selling stock and, they're buying Bitcoin. And that's just not, it's apples and oranges. And so the question we have is the company like Long-Term Capital is just so unbelievably levered on a spread and so dependent on financing that it goes away? Or is it something that the financing stays and keeps them in business and, you just kind of wait the game into the spread mean reverse?
So it's more the latter, Bob. They are not hyper levered because Saylor has done the smart thing. And I want to step back and for all the people that don't understand this trade, particularly all my good friends on social media, I am doing the exact same thing that MicroStrategy is doing. Basically, I am actually selling MicroStrategy stock, which is what they're doing, to buy the underlying asset, Bitcoin. And yes, they have a software business, and we valued it at between 500 million and $1 billion. But the fact of the matter is, this is a Bitcoin holding company. And in effect, right now, you are paying, if you buy MicroStrategy at $400, I think it's where it closed today, you are buying Bitcoin at basically 2x the NAV, meaning you're paying about $220,000 for Bitcoin, which trades at $110,000. And all we're saying is it's in MicroStrategy's interest to keep selling equity and equity-related stocks, to keep buying the underlying, because they do add value that way. And that's fine. But I'm going to do the same thing they're doing. And of course, Wall Street being Wall Street, although there's only a finite amount of Bitcoin, which is what I'm long, there are lots of copycats that have now cropped up to do the same exact strategy, thinking they're going to get rich by buying Bitcoin and having the market value it at 2x or 3x. Right. And of course, I always point out, like the Fed, Wall Street has a printing press. And if an idea gets too popular and too silly, Wall Street's going to create paper to fill the demand, and that's what it's doing right now.
So
we're doing the same thing.
Question. You're saying that at some point, the investor class on MicroStrategy is going to get smart to this trade and say this is just nothing but dilution, and then
they're paying $2 plus for $1, and so the company is doing everything in its power to close that spread too. So there's a catalyst, which is great. And of course, MicroStrategy has over a $100 billion valuation. So there's no borrower problems. So I haven't seen an arbitrage like this in this size in years and years and years. Yeah. And it's really due to retail investors who have convinced themselves that this leverage play on Bitcoin is the way to go. And I keep telling them, just borrow money yourself to buy Bitcoin if you want to be levered. You don't have to pay 2x for it in the marketplace, and that's it. It's nothing more than that. I don't have a view on Bitcoin. I don't know where it's going. I don't know what it's worth, but I do know that it's not worth 2x the last trade.
Let me ask you this. This is a stupid reporter question. I'm not a trader. You know this stuff. Why did he have to go long on Bitcoin? Why couldn't he just short?
Because the
MicroStrategy?
stock was trading at 2 times the value
So you
of
couldn't.
Bitcoin. The implied value of the stock was twice the value of Bitcoin.
So the way the trade work, you have to buy the
You-
underlying
you-
asset.
That's right. And you shorted the top. You shorted the thing
Right.
trading at a premium. And he captured all the premium because look at what happened to the stock price.